I'm here to pitch you a company that you have been pitched before. I'm going to take a different angle.
Is this Sofi again?
Nope.
Oh God. Okay.
I've not just come back weekly to pitch Sofi.
I know he's going to
Oh
talk
my
about
God.
Upstart.
Oh, here we go. Here we go.
I'm here to talk
no.
about Upstart.
You got to pitch KRIS more than me. I mean, KRIS.
No,
KRIS
dude.
is-
It
Tanner,
honestly,
do you want to make money in the market?
yeah. And so this is a company I'm not in currently. Okay. Because of the most recent run up, but this is one of those companies that I really do want to argue back and forth on this company because I want to make sure that you guys understand what this company does. This is not a lender. This is not a bank. That they don't try to hold loans or have to deal in risk. Okay. This is a platform that sells loans to banks. And it's really, really exciting. Okay. Right now, this company is getting killed. Can I share my screen a minute?
No.
Yeah, share it.
Don't let them do it. One thing is true. Okay. So I'm not like, I don't know who on this panel, KRIS, I mean, you were doing this a little bit for SoFi, but if management is pitching me numbers, I have to believe the numbers. This is a better loan than FICO's can offer. Okay.
Carlos, he's never heard of FUV.
Anyone can have a nice deck. I used to do them, but no, but let them.
No, I mean it's true, but I would say that most times they're true rather than fraudulent. I would have to assume that. 53% fewer defaults at the same approval rate. So what they're doing, essentially, they have three different business models. One, they either go out and get clients themselves under the Upstart brand, create the loan, offer it to a client at a at a different sort of credit model than what they were originally using that is supposedly better. You can see Upstart's numbers here across their sections versus FICO on heading down the column. They are a better loan. Okay. One of the exciting things is that
before you go there, just to be clear, what they do is like they're an analysis company, right? They analyze the risk of a potential borrower, and what you're saying is their conclusions yield 4 times fewer defaults based on their evaluations against, say, the FICO score is essentially what the business model is. Yeah.
Instead of it being around like 6 different weighted data points that FICO looks at, it's more like a billion different data points, where they're taking in constant new data and the algorithm is getting smarter every quarter.
Right.
For example, this quarter, I think they made I won't find it here, but it's something like 23 different upgrades to the algorithm.
Okay, but that's essentially what it is in a nutshell. The
and Tanner, you don't think these multi-billion-dollar banks have similar algorithms that let them pick and choose clients? Same thing with SoFi.
Yeah, they do. But for example, you brought up SoFi. SoFi uses Upstart, so they are a client. It's also a reason why I'm getting more interested. So SoFi, even though they have a very smart algorithm, still relies on the backs of companies that do this like Pagaya and Upstart. So what's also really exciting is that although their revenue has fallen off a cliff, if you look at the balance sheet, this is a terrible company from how their business has been going, okay? And the reason is just macro conditions. Banks can wait it out. They don't have to pay an additional fee to Upstart for really high-end loans when they don't believe that this is the top of the interest rates that the feds are going to go at. Once it actually does get to the top, we're expecting a different market. That's why they're guiding for 35% quarter-over-quarter increases on revenue. 35%. These are not small numbers.
Tanner, can I ask you, what's your background? Since I don't think I know.
I'm a financial advisor.
That makes sense now.
I would say one thing that's right now, all the banks, they're shoring up their liquidity. They're not in the business of buying loans right now. They need cash on their balance sheet more. So in the short term, Upstart's business is going to deteriorate even further. Maybe in the long term, banks want to get back into the lending game, but origination and everything else, a lot of banks can do it themselves. In the current credit market and liquidity market, I don't see how this company. I don't see this company, especially with the burn rate. That was one of the biggest arguments that we had when the other person was here. Their cash flow burn rate is bad. So
Yeah.
the question is, how are they going to get around that?
They cut 30% of their workforce. So the funny thing about building AI algorithms is that once you build them, it kind of cuts the need out for those engineers. So they're at their highest like what they can't control is the bank's wants for new loans. They can't control that. That's out of their I guess their pay grade. What they can control is how good their algorithm is. And so their fully automated loans are at the highest that their business has ever been at 84%. So part of automating the largest majority of your loans and getting higher and higher every quarter is you don't need staff anymore. So although it kind of sucked a little bit that they had to cut staff, it is kind of a business where they can still run at the same levels, okay, as what they were doing back whenever this company scaled to $400 per share. They can still run at those same levels, but they don't need as high of an amount of loans originated in order to break profitability.
Yeah, they also have a ton of insider selling, dude. Like I'm looking at this right now.
Can I just ask a simple question? And I like to ask this a lot when people pitch companies. Yeah. Give me a headline that will come out, say in 3 quarters from now. Give me a headline that like at the top of like Yahoo Finance that people go, equivalent to Apple announces Unity will be the main developer for
20%
for the Vision Pro, 20% up, and it's a rocket ship. Give me a headline like that for Upstart.
So this is already a rumor, okay? Rumor, not news.
No, but that's okay. But okay, if it comes to fruition, okay, I'm listening.
Wells Fargo exclusively uses Upstart to risk loans.
Okay.
Are they a really big client right now?
No, they're not. No, they're not a known client right now. Here's the thing, though. We went from whenever the company actually went public, I think it was Q4 of 2020, they had 10 different banks that they were working with. Today, they have a total of 100. So they've 10x since Q4 of 2020. And now the exciting thing, because banks are not originating loans to them right now. So I'm not saying their business is great right now, but they have zero problems with returning banks to fund new loans whenever they're ready. Like banks are not dropping off the platform. They're just not originating loans right now.
Tanner, do you think at all that Upstart is one of those companies that's getting locked in with the AI mania because they keep touting AI lending, which might actually be AI driven, but do you think at all the premium, I think it's up like 100%, 200% in a month or something?
So yeah, I learned this today. I learned this today. Paul Gu or whatever, the co-founder that actually developed the AI algorithm was a Peter Thiel genius child that got like a grant to go fund a business, and he was part of this really exclusive clubs of American children that were selected by Peter Thiel himself to go fund businesses or to go start businesses. I think that there is a good amount of goodwill baked into this company, and I don't believe he'll leave because he's been there since 2012 and he's only in his early 30s.
Yeah, but my question is, are they actually using AI to drive transformational results in lending, or do you think that the headline
100% AI?
So why is the stock up 160% in 35 days? Do you think there's any financials that? Because I'll tell you some of the financials.
Because it's down 99%.
Yeah,
well, I will tell you the. Okay, yeah.
Because
it's that Palantir chart. It's down.
No, I will say that
let's fucking go. Let's fucking go.
I will. No, the only reason I bring up Palantir is because I don't think they deserve to be up 150% in a month, but investors really think they have an AI moat. So I guess my question to you is, do you really think there's an AI moat to Upstart to warrant the premium?
Upstart, unlike SoFi or any other companies that I look at, are restricted by a couple things whenever they're growing their loans. So they need a bunch of deposits in order to fund their loans, or else they have to go externally. And even if they do have all this fund, like SoFi even goes past their deposits and then they start getting into warehouse facilities, they still can only grow their loan book by like 20 billion at max. Okay. So they are completely capped. Upstart, there's zero cap because it's not their loans. They're doing this for banks.
That's the question. If everything that you think is going to happen happens, what's the upside?
Well, for example, if maybe we can bring up the chart, the stock can
highs again. Do we hit?
Well, what's the current market cap? I don't even know that. So what is the
current market cap is $2.5 billion. I put this in the chat. Current market cap is $2.5 billion. Okay.
What's an equivalent
Wait, real quick. It is up 160% in 35 days. And prior to that, it is down 97% in 562 days. Previous all-time high was $409, which would put it at, what is that? Almost a $25 billion market cap.
The funny thing is, it wasn't all that expensive whenever it was $400. Like the
Bring up
company,
Lamb Lock. I like his analysis of us.
the company really did run up.
Amit,
What?
you bring up Lamb Lock's comments. It's just funny.
Oh, sorry, I was in the private chat. Lamlock. Carlos won't buy unless it is a good headline, but Ty thinks it's just a bank, even though Chris needs some good numbers to show it. And I'll only buy if Chris buys.
Chris is like the bouncer to your bank. He's like, yo,
Bro, you know what
whoa,
happened
you want
yesterday?
I just want to point out.
Hold on, real quick. Let me say this. You know what happened yesterday? Chris was like, I'm thinking about ARM. I'm thinking about SoftBank. I'm like, Chris, you're getting me a little hard for SoftBank if you're really thinking about SoftBank, really, because
They're not a bank, by the way. SoftBank is
I
not
know
a
they're not
bank.
a bank. I know.
Chris,
I'm
I
not
got my
that
oils out.
Chris, text the group chat, guys. I got 50,000 of SoftBank.
All right.
Guys, I got
okay,
5,000 of SoftBank. I don't know what you're talking about. I got this right after.
Hold on. So
Listen,
market cap,
SoftBank went from $18 to right now $22. So they're up a lot. A lot of people are buying SoftBank for the ARM.
okay, he's pivoting. Before he pivots,
No, but Matt
2.5
Money's
billion.
actually.
Hold on,
Matt Money's
2.5 billion.
Okay.
Let me just find out some information. 2.5 billion market cap.
Now, yeah.
What's an equivalent company to this company? Just bring me into that fold.
And another stock would be Pagaya.
And what is that market cap?
I think
800 million.
similarly small.
It's eight.
Because
It's
So it's even
800
smaller. What's
the ticker?
another? What is the current contender? Who are they beating? Are they beating FICO scores?
Yeah, but that's not really.
What's Experian worth?
I'm not sure. I'm not.
Well, I
sure.
mean, these are the companies they're going to be competing with, right? This is.
No, I'm aware. This is
right. This is
well,
what they would be.
this is. I'm just starting my due diligence. I just didn't think that you guys got the full picture. I think maybe some people thought that this was a lender. This is not a lender. This is like Palantir for loans. They have a
Okay,
better
so I'm
way
asking you
of-
some questions on that. So give me the competitor now is this old guard doing FICO scores. It's Experian or
Well, I showed you the statistics.
what's
of
the market cap of that, Carlos? Can you check that if you have
Which
something
one?
up?
Which one?
Like the three credit bureaus.
That's what I'm looking up now. Experian. Let me look.
There's three of them. I'm forgetting the names.
But
right
even
now.
that really doesn't do. what-
TransUnion. There's one more.
Right.
There's like three of them that have
Experian.
monopoly.
Union, Experian, and isn't it FICO?
So, well, what's the biggest market cap of one of these companies? If does anyone in the comments know? Oh, there, Experian's worth
TransUnion-
33 billion. Okay,
and TransUnion's 14
there
billion.
you go. Thank you, Novaj Siva Kumar. So 33 billion, and we do have a 10x possibly if they take over some of that. So that's what I want to know. That the other question I have is the data. So
Yeah,
the data.
so-
Where do they get the data? Do they own it? Do they buy it? What happens? How do they get all this AI data?
That's a perfect question. So there's three main business models that they have. They go out and they acquire the loans themselves using the Upstart brand. They sell their AI algorithm as a white labeled platform to other banks. So then they don't even need to be the household brand. Like, for example, Wells Fargo has their own clients. They can just use the software.
Do they get to keep Wells Fargo data, or is that sectioned off because that's private consumer data?
Yeah,
And they're not allowed to incorporate.
But
that.
his point is whether they keep the data or not. Once the
Yeah,
system is
but
trained
wait.
on that, it doesn't matter to keep the data. They don't need the data.
No,
just need
they need constant data to update their models. As
No,
as
they
get
do.
more
And-
information.
keep getting the data, but whether or not they keep it, it doesn't matter. The machine's been trained.
No, you're supposed to.
parameters.
If they're not allowed to take the data, if there's consumer rules against that, they can't use it to train their models. They cannot. So
Wait, but he just said that's what they're using. You said that every quarter their model is getting better because they're training it on the incoming data that they're using
So
to
that's
assess
what I'm
current
asking.
loans.
Is it the white label data or is it the data that they're selling the loans? That's how they're training there.
If you would stop bickering between the two, yeah, I'd let you know. So
Well, you've
they
never
do
seen the
actually-
podcast. So
Yeah,
what
I
can
know,
say?
right?
Welcome to the Junkies.
I should be
So-
expecting this, but
So
and
so
then
one thing, Tanner, and
Tanner,
I'll
go
let you
jump in
go.
the pool.
I'll let you go. Hold on. The
What's up?
companies that you're comparing them with, Experian, TransUnion, that's
I did
the
not
one you
compare
want.
them to that. That
No,
was
you need the better one is Fair Isaac. Fair Isaac is the one that developed FICO, and they're actually a publicly traded company that's worth $20 billion right now. You can actually look them up. The stock symbol is FICO.
Of course, how do you know all this shit, bro? I
He's
don't
looking
get
it up,
how do
dude.
you know all this
Because I
shit?
know my banking.
I
dude.
actually
my
did
banking.
know it was Fair Isaac Corporation, but I didn't know that was still a company that was around.
Yeah.
Wow.
TransUnion is 14 billion too.
The
All right, that's good to know.
the third business model is them servicing the loans for them, similarly to the way that SoFi would do it on their platform. So the actual ownership of the loans and where all the money already goes is not theirs, but they'll service the loan, take the payments, everything along these lines, and they take a service fee, and they bring in about 90,000 payments per day, which builds their algorithm.
Okay, so it's their own loans that they're making, they're originating.
Yes,
Yes.
but it's not under their balance sheet.
What's the third business besides the white label and their own loans? What's the third one?
Sorry, it's so they take a flat fee for actually originating business. It's the servicing of the fee or of their actual loans, which doesn't need to be theirs either. They'll also facilitate the loans that aren't theirs.
And are they 10x better? I think we went over this a little bit, but are they 10x better than having just a FICO score?
I believe so. I believe so.
No. Is the data been proven that? I know they've done studies, but do their studies show that they're 10 times better?
Okay, not 10 times better. Wait, here, I'll tell you the two statistics that they're showing up in this quarter.
Better? I mean, like,
yeah. So they have a 53%. They have a 53% fewer default.
He had it up on screen.
I wasn't even looking.
Oh,
but
yeah. They have a 53% fewer default at the same approval rate, and at the same default rate, they have 173% or more approvals at that same default rate.
Share your screen so we can see that.
Yeah. Okay. Bear with me.
I mean, he's making a good case once he gets to the important stuff, which is basically, are they actually better? What's the market cap of the people they're competing with? If you led with that, I think you'd have a better argument instead of.
Well, I did lead with that. You didn't lead.
Listen. Yeah, he did. He
okay, maybe I stopped listening right away. It's possible.
Once you say Enphase, Vitaly's like, huh? What's going on?
You should have been like, Enphase is using them.
Bro, if you said Enphase,
you know what this is though?
Vitaly would buy them.
Can I plead my case here?
1.7. Look, 70% better is a lot. That's still something. That's not.
This is my case to a bunch of and I thought you guys were much more bullish on Palantir, but maybe I'm just pitching to Amit here.
Yeah,
Palantir. What Palantir did for a lot of organizations, showing off, they have the data. We'll show you guys how to actually read it. I'm a big believer that Upstart could be. I'm not an investor yet. Could be. Banks have all this capital. Let's show you how to deploy it, because they don't actually know how to deploy it. This is a technology platform. They have what's seemingly infinite scalability, because from quarter to quarter, they have a single quarter here during the pandemic. This is what made them blow up in the stock. They nearly 4x'd their revenue. I was about to say they're more than 3x, but it was like 275% plus growth in their revenue, because it's not their customers, it's just their platform, and the tech scales infinitely. It's very interesting. That's all I'm saying. And I don't think that it was given enough justice last time.
It was given plenty. All right. So
you don't see any of his bull case? You don't see any of the bull case there from Tanner?
Actually, I guess with the questions I led with, I'm seeing more of a bull case in terms of, if it keeps dropping, then I'd be more interested. But right now, it's still.
I think piggybacking on that, yes, as a trade. But my next question would be, why would I invest in this company when there are other companies at an equivalent or similar market cap that I feel are just so much cleaner, say a cleaner business model, right? Like me personally, like I see the value in investing in certain companies in the banking sector for the value play, say for the dividend. But to try to find a 10xer in the middle of the banking,
Tanner's saying this is a growth company.
Yeah, this is not a bank.
That's my thing with it. That's what I think my issue with it is. If I'm going to put $10,000 into this, now I got to watch and dig up news on Upstart, and I don't have
boring.
I'm not pitching it to you guys to add to your portfolio. All I'm saying is, if you're looking at this like a bank, I think that's completely wrong. I think the way that you should look at this is, what's the total addressable market for personal loans? By the way, like Eddie said, they're getting into auto loans, HELOCs, and their improvements on these products are insane. HELOCs on average take like 36 days for the user to get for the customer to actually get their capital. Through Upstart, it's going to be like 4 days. The difference in that leads to an NPS score for Upstart that's like 83. It's way above. Like, if you're comparing it to banks, you're looking at FICO or net promoter scores of like 25 to 30, not 83. This is not a comparable business.
You might have a good company in your hands, but it probably has to drop massively for it to be valued better. I'm looking at just some of the stats here. Average analyst price target. Look, I'm not saying analysts are right, but it's $12, not 31 that it's right now.
Yeah, well,
Everybody's
they're
basically
just
saying
going
sell it.
But even that, it's at $7 right now, Vitaly. So that's still a
What?
No. It's at $30.
Upstart's at 31.
I'm sorry. Hold on. Let me pull up
Upstart's
today.
31, and it has an average
Yeah,
price
sorry.
target of 12. We have Citigroup sell. They changed their sell rating to sell. It says here.
Which, by the way, that $12 price target, that $12
Wedbush
price
to
target is
underperform.
literally the bottom of the channel.
Morgan Stanley underweight. Look, I'm not saying that that these guys are always right, but they do like to push the stock in one direction. So maybe this is not the right time to be buying Upstart and waiting for the half price off discount before you even go in.
Yeah, I mean those are the people that invested less than 30 days ago. You know what I mean? So
Morgan
this is the power of Upstart. Is what were the analysts saying before this company 15x, during a bear market or during a bull market, and so look. I wish we could get a chart, and I'm sure Chris probably has one on deck. Look at the amount of capital that pours into personal loans as interest rates as they're rising versus whenever they're stable. Okay. Or even better, as they're falling. Because right now, as we have to understand how personal loan markets even work. As the interest rates are even rising, banks are getting fixed rates on those personal loans. So if it's at 1%, they'll go, okay, you know what? Our analysts are saying interest rates are going to continue to climb at the Fed. I can wait. Upstart can't wait. So they got destroyed. That's why they're down 90 something percent. Okay. But what's great is that whenever it is stable and we're at the top of the interest rates, which maybe is 25, 50 basis points from now is maybe what I'm believing, then banks are going to go, okay, I actually do want this rate. Now let's actually pour in. We've been on the sidelines. It's time to go in, and there's nothing stopping Upstart from doing 10x the volume next quarter. I'm not saying they will. I'm just saying there's no capabilities, restraints to that. And they have 10 times more actual banking partners than they did before, and 9 new auto retailing companies that they just didn't have in the last cycle. It is very compelling. That's. I just wanted to give the company some justice.
You didn't get any here.
I hear you, but if this was like instead of Shark Tank,
I think it's Wong's turn. We have our 3 people that we said.
We had a bunch of people join, but I told them tomorrow. We had a bunch of new people join today, but
the valuation on Upstart right now is very stretched, especially considering they're still burning cash. The minute that they stop burning cash, maybe I'll take a second look to see what their business model is, but their business is slowing. The macro economy doesn't support their current share price. So eventually, in my opinion, they'll go down. So right now, this is not the most appealing thing to me. There are other companies in the market right now that are trading way below book, way below with undervalued PEs. So why would I want to risk my money on something that could be big when I know that there's companies right now that just need to get back to normal, and I'll be able to make a double, if not. How much are you up right now, Amit, on our positions? Yeah, exactly. Look at his eyebrows.
You saw,
yeah,
because it was a lot. Yeah.
So
it's the most I've ever been up on a position ever in my life. Like,
yeah, Chris,
and that position ain't Palantir, buddy.
I mean, look, I was there with you when we spoke about Nubank. I was there with you when we spoke about SoFi. Why would I want to trade in companies that are performing, doing well, improving their business, and instead take my money and put it in a risky turnaround proposition? Because right now they're in turnaround mode. They're not in growth mode. They're in turnaround mode. So I'm not investing in turnaround. I'd rather go in a direction that I see the market is already moving towards anyway, and make a nice guaranteed double, if not more.
Yeah, no, I think I think their business model is
Tanner. People hate doubles. Doubles are sweet. Okay, if you do like 10 of those, you're a millionaire.
Sorry, doubles?
Yeah, getting doubles.
Double your money on.
Let's say Chris doubles his money on TFC, and then he doubles his money on the next safe play, and then he doubles it again. You do that enough times, you never have to worry about money again.
Fair enough. I honestly, I'm looking for 10, 20x companies, and I found them before. I mean, I was very early on Nvidia. I was very early on Tesla. I was very early on Canopy Growth, and got out at 11x my actual price at the time. I mean, I've never been right on timing. So I'll agree with Chris. The second that he flip-flopped on SoFi, it was the bottom. So who was the chump? me. Although I've been on it earlier, that doesn't make me right.
I
He
don't know.
got
I
in
think
at a
Chris,
way
I think
better
Chris,
price.
I think Chris got the bottom there.
Yeah, no, I
Chris,
mean,
Chris got the fucking bottom.
There were $4.70 calls, and then I followed him right after at 5.
And then so did I.
100%. But that's not where my specialty lies. I'm trying to find companies
You
that
find
I
the
think
tops. That's your
have
specialty.
competitive advantages.
No, Tanner, I think you present a good case. I guess
does,
just-
he does.
Are you really going to put
100%.
money into the
Yeah,
Upstart?
don't do it, Tanner.
I haven't put any money into it. Also because I'll have to sell stuff to
Wait for better data. Wait
I-
for better data.
Or
That's
I'd
the-
love to see you put that incredible like due diligence engine you have on companies
Yeah.
like Amazon or say
Google, and
Apple or
Face, Tesla.
Google.
Yeah,
No,
Yeah,
I'm
but Tanner,
serious.
you don't like large tech that much, right? mean,
I
you're not a
love
fan
large
of-
tech. I don't talk about large tech
Okay.
because large tech is covered. No one's talking about the
Well,
companies.
it's covered, but the thing is, what you're looking for, like the moonshot, right? You're looking for those like super. You're looking for those gems, and that's really hard to find. And with where we are in the market right now, you have to understand something too. Where we are in the market right now, a lot of things are going to look like that because everything's so beaten down, right? So
Yeah.
everything is going to look way oversold. Everything's going to look like in the red.
Yep.
This is the danger of the bear market. I think I think Matt Money actually said that everything looks fucking amazing right now because everything's so beaten down.
Yeah, but
Yeah,
usually
especially
after
6 months
2000
ago, it was like, what do you buy? I didn't even know what to buy. It
I
was
know
all
you
so
don't
cheap.
even know what to buy because everything was just such in the toilet that you're like, well, I can probably get a double on anything. So like, it's basically where do I want it from? So I would just hope that you balance some of what you're doing here, like looking for the 10x companies to balance it with some research on what is the bear case. Like, it's like I read something the other day, like Metallica Black Album. You guys remember that album, 1990?
Yeah.
They're still selling like 1 million copies, whatever it is. Like,
Damn.
who bought the Black Album yesterday? Right? It's like,
Yeah.
okay. I was rocking out to that thing since I was in high school, right? Or whatever.
1991 or something like that. Yeah.
1990 it came out. So the point is like, who's just starting a position in Amazon today, right? There's people that are doing this today that are going to make money. There's millionaires that are buying, or the future millionaires that are buying Amazon, that are buying.
I think the mistake we make,
Today.
to Carlos' point, the mistake we make, and me and Carlos made this mistake multiple times, that we think, how big can this get?
Right.
Right?
It's
like,
over. I missed it. I missed it.
Apple at 600 billion, Google at, when I actually bought Google when it was around 600-700 billion. That's the first time I bought it. And I was like, where's this going to go?
Right.
Like,
Yeah, but
it's
you-
at a
you
trillion
kinda
now,
did
but
that
where's
with
it going to go
Upstart,
now?
too.
If I get 10%, I'm happy. Yeah.
Yeah, like
You-
the thing is almost doubled basically, and I think it has doubled. So my point is, like, these companies that we think are too big, they're not. Okay, even Apple we were talking about. I'm like, where's it going to go? It's probably going to double.
6 trillion. It'll be. I think it'll be probably the first $5 trillion company.
Yeah, so I'm saying, like,
Probably
while
get there.
you're trying to find a
Microsoft will follow.
10x, you're missing a double because you're so hungry for a 10x. You might.
Well,
never
I
get
don't
there.
even think that's a problem. If you want to find the 10x, sure, but I just don't get why you're still excited about Upstart. Like, do you think they're the only people in the market doing this, so they have a monopoly, which is why it's a clear 10x? I don't care if you're going for 10.
I mean, you could say this. Do you think Palantir is the only
yes,
people that are
I
trying
do.
to
But
figure
that's,
out
that's
data?
my yes, but that's my question too. Do you really think Upstart is like the AI loan lending platform that's going to be a $20 billion company one day?
No, I think out of the companies that I've looked at, they are though. And I mean, do I?
So it's
have
either
to-
yes or no. Like,
Well, I just don't know. I haven't researched every company on the market. So I don't
because
know what's
Tanner,
out there.
this is why the answer is important. Because if it's just the 2x, if it's a $6 billion company, then I think Vitaly's right. Then it's like, why are you wasting time in this? But if it's really a 10x, then that means there's some monopoly here or something that's so special, and that's where I think the research and due diligence matters, and like it's worth the time.
Look, I think they've already shown that they're able to absolutely 10x their revenue in around 2 years during a bull market. Okay, that's absolutely possible for them.
You
And that
can't
was
caveat that stuff. Great companies can increase their revenue during bad markets, or they figure out how to do it.
no,
Even if it's
and
financial engineering, they figure out how to do it.
this is a young company too, though. They're 10 years old in total, right? And like I said that in my case, that they are extremely susceptible to a bad market. That's why they're getting destroyed. But during bull markets, they are absolutely leveraged. They are very, very strong when things are going great. And it's a bet on, if you believe that the future is going to bring great things in the lending side, and the way that we'll measure that, or the way that I will at least, is the macro environment. Are interest rates going to either stay steady,
Okay.
which would be great for their business, or going down just as great?
Question for you: are there other companies that can return the same multiple without that risk in a bull market? Same environment, $10,000. Are there companies that I can get a 10x from make 100 grand or 90 grand, right? In the same period of time in a bull market with less risk. Do you think that those opportunities exist? Because you're deciding to put your money there, right? It's an
I'm not.
opportunity.
I'm not.
Right.
I'm not invested.
The case,
and
the case is to put your money there. It's like I don't know. It's like betting on a sports team, right?
And just like the last guy, we destroyed him with his upstart conviction.
For me,
No, Tanner's
personally,
not. Tanner
I was
has a
gonna say,
case.
do you guys
He's
think
not-
you're destroying me right now? Because I'm not feeling that.
Of course.
I don't know. I don't think
No.
Tanner. I think Tanner.
I'm
Guys,
not feeling that.
Guys, the thing that people should do when they're analyzing companies is
Yo, smash that like button, everybody.
also learn how to wait. Like wait for better data. There's no harm in waiting for a little bit of better data so that you can make a real defined thesis. One of the things that I did with SoFi, I really looked into them, and the numbers didn't necessarily make sense until the last couple of quarters when they started to really change the direction. Their CEO actually said, like, look, this is our target, this is where we are. And that's where I knew, okay, this is the time where things are actually starting to turn around. With Upstart, I would do the same exact thing, which is let the business get back into growth mode. Sure, you may not nail the exact 100% bottom, but who gives a shit if you think that this is a 5X company? I'm willing to pay a 5% premium for missing the bottom as long as I know the company's actually doing right and performing. That's the big difference.
But here's what I would say though, is that a 5% premium is great. Whenever they announced earnings, the stock went up 56% or something overnight.
I think a lot of their recent write-up has been more along the lines of AI. Anything to do with AI has gone parabolic. So I would just say, even Lemonade. Look at Lemonade. Lemonade is also gone parabolic. Why? Because any company affiliated with
it was low.
Any company,
It was low.
any company that's has AI behind it right now is getting a value premium. So all I'm saying is right now, let the numbers reflect that thesis, and then you can invest in it. See?
Yeah. No, I mean, and your track record would prove to be correct. I just also think waiting is, and this is going to sound really FOMO-y, and I try not to do that at all, but waiting's easier in a bear market. If the environment changes, you're not quite rewarded for waiting nearly as much as you are in a bear market. If we're leaving a bear market, and we won't know till it's over. And the Nasdaq already year to date is showing us that either this is a really good rally, or this is over because we might be at the top of the interest rates.
No, I think this rally has been led by the generals. Okay, the big tech, big companies are leading this rally. Okay, that's why we're saying most of the smaller
Nvidia
tech,
is leading this rally.
like medium tech. I mean, not just tech, sorry, but medium-sized company. The regular S&P 500 is not like that gangbusters going up right now.
Yeah,
so
right.
just saying,
remove the 5 big main ones from the
Yeah.
S&P from that, and then look at what the market's actually doing.
Yeah. Now, what's interesting is they will eventually catch up to this, right? Because as the business and economic situation improves for the US, we have better rates coming down the pipeline. If inflation is really licked, that means that all of these other S&P 500 companies, the small and medium caps, the Russell 2000 will start to actually do better. And you're going to see big tech actually underperform the Russell 2000. So what I mean by that is not the big tech won't be going up. It's just they won't have the same returns as a company that has a PE right now of like 8, but it's a small it's a small cap. You know what I mean? So right now I would be on the lookout for high quality small and medium cap companies that have track records of outperforming in whatever market that's out there, and there's just been caught up in the macro, and they'll be able to outperform and they'll do very well. Most of my research right now is not big companies. Like I'm not looking at companies that are 20 billion plus right now. I'm looking at companies in the sweet spot between 2 billion and 20 billion in market cap.
But do you not think that you kind of named
Ring
Upstart
that
there,
cowbell
like
already. Give the people what
a
they
company that's used to
We'll do it at the end.
outperforming that got caught up in the macro? That sounds
Say-
like Upstart.
Say that again.
So I feel like you kind of named Upstart, like saying that you're looking.
Unfortunately, there's a huge difference in that Upstart's business is deteriorating faster than ever before. Like if you look at their revenues, they've gone like literally parabolic the wrong
terrible.
way. When I'm looking at companies, I'm looking at companies that are either going slightly higher or flat, but their stock prices have cratered.
Right.
That's what I'm looking at.
That's how we found TFC. Well, that's how you found SoFi, and that's also how we found TFC. Right? Stock prices cratered, but didn't deserve
the
it.
business is doing better. Like there right now is a time where businesses are doing better, but their stocks are being punished in the macro. And that's where the real opportunity lies. Because if you can find those companies, You'll be a millionaire by the end of the year.
Well, then we'll do this, okay? I'll find the companies, Chris. You tell me when to invest in them, and we'll make a fortune.
I can't tell you that. I can't tell you that. I don't know. Dude, a lot of my
you're not in
stuff
our
is guessing
WhatsApp, buddy.
too.
Right. All right. Well, look. We're at an hour and
By
18
the way,
minutes.
our
It's like-
WhatsApp, I've been on fucking fire. Anytime I've actually called something out, these guys, they just ignore all the fucking.
Oh, he said
stuff.
Weight Watchers. We were like, whatever. He said SMCI at 70. We were like, he said Duolingo. We were like, whatever. And then when he said TFC, I'm like, Chris, we're getting on a FaceTime tonight for 5 fucking hours. Carlos, you're joining. We're not ignoring this fucking one this time.
That was
And
good.
now you're rich because of it, you son of a bitch. There you
Rich.
go.
Rich.
See?
It's a lot of
All right.
money.
Well, again, we
Lot of
keep
money.
talking about trying to limit these to an hour. I do got to get going. If this
All
is
right,
like
yeah,
Shark
right.
Tank, I want to say thank you, but I'm out.
Let me ring the bell. We had 500 tonight
Ring
with
the
Tanner.
damn
Thank you,
bell.
Tanner.
Let's get a move on.
All right.
Thanks for
We're
having
out,
me,
ladies
guys.
and gentlemen.
5:35.
Thank you, Tanner. Appreciate it. See you guys tomorrow. Good night.
Later. Bye.
Right.